Hello out in Facebook land. My name is Pat Kenny with Barnum Financial. I am joined by our good friend, Mr. Greg Antipov from InSource Accounting, CPA over in Waterford, and the most famous person on this session, our friend Nicole White of One & Company. We are picking up what was an interesting conversation we were having on Real Estate Radio on Saturday. If you missed that, make sure you check out the podcast so you can listen back to that. I just broke a huge COVID rule by touching my face. I hope I'm not setting an example for everyone. Goodness, it's so hard not to do it. But we are going to dive into some of the things that are involved in the $2 trillion stimulus / aid / relief packet. Nicole, I don't know how much of this you were tuning into on Saturday. It's some pretty crazy stuff. Greg has taken a pretty serious lead on reading a lot of this stuff. Obviously, it's very impactful to local businesses in the area. Obviously, all three of us, as well as our friend Byron, who's facing technical difficulties but is attempting to fight his way on. We're all pretty directly impacted. I mean, obviously, this pandemic has taken a huge toll on everyone. Obviously, health is by far the most significantly impacted. But obviously, the world of the economy is also kind of in some trouble. So we had a really good conversation on Saturday. I don't know. Byron has the best equipped studio by far, but I think the lowest dial-up speed I've ever seen.
Listen, I don't know what's going on. The world might really be coming to an end here because the internet crashed in Niantic, which makes me very upset.
I can't believe we're in 2020. The one thing you need to have working is the internet, and it just doesn't.
You got to have the internet to make it through this. That's for damn sure.
So we're giving a little recap on obviously what Saturday's kind of session covered. I'm trying to do my best, Byron Lazine. I didn't wear a hat, which is I feel like you've been doing more recently, but diving
get away with the hat right now. That's
what happens when you don't shower every day.
I'm definitely showered today. I've been taking 2 showers because if I leave the house for eggs and milk, I take a shower when I get home.
Have to.
And just burn all your clothes. I think isn't that the advice? Well, hopefully some of that $2 trillion stimulus package will get us some more money to be able to buy some new clothes. Greg, you had done a little bit of the homework on this. Byron's already shaking his head.
Well, I tried to order socks the other day on Amazon. It said 21 days for socks. So because it's a non-essential item. So I don't even think you can get the clothes. But
I feel like if you buy the Amazon name brand, because it actually is named essentials, they might make an exception for you.
Oh, okay. All right.
Probably not. But some of the stuff we're talking about on Saturday is some of the finer details. And Greg, you probably had a little bit more time now to dive in a little bit. I've actually was inspired by some of the stuff that you were sharing with us over the weekend, so I dove in a little bit as well. But really quick, very high level, the average American, regular kind of mom and pop stops versus hourly employees, those kind of things. Can you give us just a quick little overview on some of the things that people are going to start to see now that it's officially law?
Yeah, so the president signed the bill on Friday. It's now law. It's one of those things, though, where we're going to have to wait and see how certain things are interpreted, and there might be some language in the bill that contradicts each other, which is often the case. So it's up to the IRS and Treasury and a bunch of people to figure out what they actually meant when they passed the bill. But for the everyday average American, a portion of this is going to be a stimulus, for lack of a better term, where a significant portion of the people in the country are going to be receiving checks. For each adult, it's going to be $1,200, and for a child under the age of 17, it'll be $500. If you're married and you make less than $150,000 a year, you'll be seeing that entire amount. Between $150,000 and $200,000 a year, you'll get some portion of that, and then above $200,000, unfortunately, you won't be receiving any of that. And those numbers, if you happen to be single, would be half that. So $75,000 or less, you'll be getting a $1,200 check. Between 75 and 100, a portion of it, and then over 100,000, you won't see anything. So that's the one that's going to affect the most people in terms of overall individual stimulus. I know there's some.
Greg, what do you have to do to get the money? Is it just going to show up in the mailbox? How are people going to get the money?
Yeah, so that's a good question. What the bill says is that they're going to evaluate this based on your 2019 tax return. In the absence of that, they're going to look at your 2018 tax return. What they're saying is if you've supplied the IRS with your bank account information, either because you owed and you paid electronically, or you were due a refund and you had that direct deposited. They're going to use that bank account information to deliver you these payments. We don't know what the time frame is, though. They would like to do it in 3 weeks. Who knows how fast that's going to actually happen? So in the absence of that, I don't know how they're going to reach out to taxpayers, if they're going to just send you a check to your last known address, which there again can be some issues. Generally, there's 2 ways to update your address with the IRS. One is when you file your tax return every year as an individual, they will take your address on that and it will update. And if not, you can actually send in a form, like if you've moved mid-year. So actually, it's a good point of advice right now. If you have not filed your tax return yet, you don't intend to file it anytime soon for whatever reason, file the form. You're gonna have to Google it. I'll if I have a second, when somebody else is talking, I'll look up the actual form number. But you're gonna want to fill that out and send it in. That way your check isn't going to an old address, and if it's now outside of 6 months and it won't get forwarded, you don't want to play that game. So
what's super interesting here, though, is that if you do fall in those parameters in 2018, it's almost best for you to wait until that July 15th date now, right?
Yes.
Or vice versa. Like if you are now making less in 2019 than you did in 18, it almost makes sense to make sure you fast forward your taxes now instead of waiting, right?
That's exactly it. That's the conversations I've been having with clients for the last 3 days and over the weekend is I know where you were in 18. Let's see where you are in 19, because we're having that discussion with everybody. If you qualified for 18, let's leave it alone right now. But if you didn't qualify in 18 and you had you didn't have as great a year in 19, let's file that return now. Now, I don't know when that snapshot, when the IRS is going to take that picture and say, okay, as of this date, we're going to look and see if you had a 19 return or an 18 return. So I'm actively filing returns for people today. I've been reaching out saying, get me your stuff. Let's get it in today, to try to take advantage of that if you qualify under 19 and you didn't under 18.
Right.
And it's worth noting too, you brought that up. I don't want to gloss over it. The federal tax deadline, both to file your tax returns for individuals and businesses, as well as to pay, has been moved to July 15th. And so there's no penalty and interest accumulating or anything like that. You don't have to file or pay until then. Now, one thing also part of that conversation we're having is if you're in a situation where you are owed a refund, right now we know cash is king. So let's file the return now, get the refund. And even if maybe we're getting a federal refund, but we owe the state, let's get the federal refund now, and we have until July 15th to pay the state. And a little asterisk there, Connecticut did extend its deadline. So if anybody's tuning in from Connecticut, our deadlines are July 15th. I will also provide a resource if you're in another state. Every state has different rules as to whether or not they're following the federal guidelines or not.
And you don't have to sign there's no extension required for the July 15th.
That is correct. Now, if you're somebody who normally waits until the October 15th extension, you are going to want to file an extension. And this is something we still don't know about is, if you know you want to file an extension, do it now before the April 15th. There's some question about the interpretation of the law, whether or not you need to have filed that extension by April 15th, or if you have until the July 15th to file that extension.
Okay.
It's simple to do. You can do it online for free yourself. Your accountant can do it with a couple clicks of a button. It's something you're going to want to have done.
Right. And obviously, if you do it before the October 15th date, there's no foul there either. So it's almost...
As long as you file. Now, if you pay after July 15th, interest and penalties will begin to accrue again after July 15th. Because typically an extension on your tax return is an extension of time to file, not to pay. Even if you file, they still want it to have the payment by April 15th, even though you don't file to October.
If you're jumping into this stream right now and you're interested in the economy's stimulus package, share this message. Definitely give us some love, give us some hearts, some thumbs up. But if you've got a question, we've got Greg Antipoff, CPA with InSource, and we also have Pat Kenny, financial planner with Barnum Plans, on this clash of two worlds. Real estate radio meets One Community Conversations. This is a 2-for-1 here, an extension of our talk on Saturday on 94.9 on Real Estate Radio. So if you do have a question, put it in the comments, and we'll take everybody's questions before we end the stream, whether it's for Greg or Pat or for myself or for Nicole, if it has a real estate angle. We're just gracious to have both of you guys on here because we're learning from you both, as we dig into what this means. Either one of you guys can answer this. This is more, I guess a projection. Who's going to pay for all this down the road? Is federal taxes going to go out? Like, what do you think? Like, who's going to pay $2.2 trillion at some point when we need to get this money back?
Greg, no.
It's a good question. I think we're kicking the can a little bit, but it's a tough thing. It's a conversation we have with clients all the time of, are we solving short-term cash flow with long-term debt? Which is never really a great idea, and vice versa. We don't want to solve long-term problems with short-term debt, like a credit card purchasing a house doesn't make sense. So, I don't know. Many mention is that it's going to be debt that's sort of passed along to our kids. And Pat can probably talk about, they're talking about floating a 50-year treasury now, which is just at some 1% number. Yeah. Like, it's just crazy. Yeah. So.
Well, I think we're running into, where we are better at adding things to the national deficit than I think we want to give ourselves credit for. And that's meant to sound sarcastic because we built this habit, and it's been administration upon administration upon administration. So this isn't the political view by any means of just continuing to write. I mean, listen, first of all, it's all fake money anyway, right? I mean, there's no currency behind it. There's no gold, there's no silver, it's nothing. It's ones and zeros on a computer screen. And I think one of the things that is incredibly lost oftentimes in the impact of something that involves $2.3 trillion. First of all, the scale of that is unheard of. You add that to the Fed buying back, call it $1.5 trillion is kind of the round number. Between the two of those, when you add those numbers into the top of what we already carry as a national deficit, and we have literally borrowed 100% of national GDP annually that we owe ourselves. That's not even real money. So every dollar we produce, or every piece of product that we produce as a country, we are now going to be in debt as much as we produce, which is the first time it's ever happened. Now, again, that's a little bit more short term. The 2.2 trillion, I think in and of itself, if you lose track of what impact that has on the family of three living in suburban Kansas or the small local businesses that are keeping around, the 2.3 trillion is really kind of left. Dr. David Kelly, who works for JP Morgan, did a call earlier today because obviously we're paying a lot of attention to a lot of these things. There's a tremendous amount of talking heads because of how dramatically the economy has been impacted by this. This is the first financial crisis that wasn't actually finance driven. The panic around COVID-19 has created an economic fallout, but it wasn't economics. It's not the 2008 mortgage crisis. It's not 1987. There's nothing actually fundamentally broken with the economy. It's the panic and obviously now the spending, the self-quarantine, all of the measures we've had to take. The next couple of quarters, I think, are going to be very tough. You're going to see very large national companies and very small mom and pop companies that have to look at what the second quarter looked like for them. And they're not going to have any income. They're going to have so little reportable income that they're going to struggle. And the $2.3 trillion is really designed to leave the economy in kind of a suspended state of animation, right? They're stopping the free fall of going further. If you imagine 3.2 million people filed for unemployment last week, what that's going to look like if there wasn't $600 a week in additional aid, if there wasn't small business loans available, if all of these dollars didn't get flooded back in, what would actually happen to the country and to the economy would be like nothing we've ever seen before. It would be so much, we would be back, we would actually be in the Great Depression all over again.
So there is something in this stimulus package for small business owners, right? And Nicole has a lot of passion for all of us do, small business owners. For a variety of reasons, I'm super passionate about the small business owner here locally. What's in it for the SBAs? Are they going to get any money? Is it a loan? Is it a grant? There's been a lot of headlines and articles over the last couple of weeks. What's in this package for the SBAs?
Yeah, so there is, the SBA has extended one of their loan programs. They call it 7A. I don't know exactly what that means. It's just how they refer to it. They've expanded it to allow for what they're calling the Paycheck Protection Program. our Paycheck Protection Plan. And basically what that is intended to do is it's going to be, as of right now, it's a one-time loan to a small business. They get 2.5 times their average monthly payroll. So for argument's sake, let's pretend you pay $10,000 a month to your various employees. You'd be able to get a loan for $25,000. The idea there is to keep your employees on payroll. And if you do that through an 8-week period from the point when you close the loan, you continue to pay your employees, you can apply for forgiveness at the end of that 8 weeks, where essentially it turns that loan into a grant. As long as you've utilized that loan to pay your employees, to pay rents, and to pay utilities. Now, with that, if you furlough some of your employees or lay them off or fire them, that amount will be sort of prorated, because the idea is let's get everybody back to work, or at least everybody back on a paycheck. I say work because some people are forced to close by the state or their location where they're at. So they're not actually working, but they're still able to get a paycheck. And the idea is there's a number of reasons why they did that, but that's the program. Now, what I don't know, or I'll start with what I do know, is essentially any business owner who can attest that they have been adversely affected by COVID-19 can apply for one of these loans and qualify for it. And that includes business owners with 500 employees or less. This also includes sole proprietors. So to the real estate community, if you're a realtor, you qualify. Also gig workers. Now, the caveat is the rules are very clear on the criteria to meet for forgiving if you have employees. It's very clear. However, what's not clear to me is if you are a realtor, for example, and you take advantage of this loan, it's not clear what the criteria they're going to use to determine if a portion or all of it can be forgiven. That's something that
if you're talking about if you're a single agent, is that what you're referring to at the end there?
Yeah. Yes. Exactly. If you don't actually have "quote unquote" payroll, I don't know. I don't know what they're going to use as the criteria to determine how much or if there's a portion of that loan that can be forgiven.
It's a hard one because it's like, especially as a realtor, I mean, you're commission based, so it's like it almost is like easy for them to claim that like you don't usually get paid in April, you know?
Right. Well, and that's why. So it looks back on the eligibility side. It looks back 12 months and it looks at that time frame and then it averages it. There's special rules for seasonal businesses. I wouldn't really argue that realtors are seasonal businesses like a typical agricultural, where maybe there's a 4 or 6 month window. But they're going to look back at the last 12 months and they're going to, of your income and expenses, and they're going to come up with a number. That side I see is easy in terms of you're able to calculate it and it's in the law. What's not in the law, what isn't very clear, is how there's going to be forgiveness for those folks.
Not that I want to encourage more agents to get out of the business over this time, but if they did say, well, I'm hanging it up anyways, isn't there a way they can get out of the business and collect unemployment? Like now Uber drivers can collect unemployment. Like what are the changes to our unemployment system with this stimulus package?
Yeah, that's a good point. I had taken notes on this and I'll have to find it, the line that I'm looking for. I think I got it here. Yeah, so historically, unemployment insurance has only been for W-2 earners, so somebody who gets a paycheck from their company. The reason they qualify because their employer actually pays in on the employee's behalf, pays into those programs with their wages, pays a percentage of their wages in. So what happens is if they get laid off or fired or whatever, they collect, and they collect against what the employer has paid in. And if they collect for a period of time, the employer has to put more money in to cover those wages. Anyways, there's a provision under the new law that says if you're an individual that's self-employed and is seeking part-time unemployment, but you don't have sufficient work history or otherwise qualify for regular unemployment, you now qualify. And that's for people like realtors, gig workers like Uber drivers and things like that. Historically, they've never qualified for unemployment. They now qualify. So, I guess what you have to say is business is down or I'm not working, but the caveat is if you claim you're unemployed, you have to be applying for employment. That's the little caveat for self-employed folks. So I mean, a lot of arguments can be made there in terms of availability of employment, but we have Amazon warehouses in state that are, hiring folks. There's a lot of businesses that are actually, have pivoted or are seeing an uptick for various reasons, and they're looking for help.
Makes sense. If you have a question for Greg Antipoff, CPA, InSource, or with Pat Kenny, financial planner, Barnum Plans, please put them in the comments. Any questions about you could even go into the market for what Pat can answer, or obviously this economic stimulus package. Pat, what are your clients saying right now? I know a lot of your clients are business owners. Are they more concerned about the market, more concerned about what this stimulus package might do for them? If you had to weigh those two scenarios, which one are you getting more questions and calls on?
So, I mean, probably 3-to-1 non-business owner to business owner clients. So, definitely more of the, oh my God, what happened in the last month? I mean, February 19th was an all-time record high in the market. Now fast forward barely a month later, and, we're on the way back up. It's going to be very slow, from everything that we gather. And, again, obviously personal opinions to a certain degree, this is going to be very much more a U-shaped recovery. This is not going to be a sharp V where we plummet like crazy and we just run right back up. There's so many unknowns still because we really haven't solved the cause, right? We don't have a vaccine. We don't have effective treatment yet. So the underlying problem, which is the COVID-19 illness, is still here. We have figured out how to band-aid some of the economic side of it, but the underlying problem remains. Until we can figure out how to get that part resolved, we're not going to move back up with any kind of level of comfort. So, I mean, I'm spending a lot more time talking about why diversification was so important. Overall, there are statistics out there that we can link after where if you were in a traditionally diversified 60-40 portfolio at the time of all this, when the market lost at its high point just over 30%, a regular 60-40 portfolio was down about half of that. So having not just active managers, because I'm not necessarily saying that's the part, but being someone who is invested in a broad swath of things and more diversified will definitely soften some of this blow. It's a lot more of those conversations. The conversations I am having with business owners have actually been, I don't want to say reassuring, but have been kind of a positive injection, because a lot of people, and I think you guys are running into this, we're seeing a lot of places that you guys have talked to that have made these amazing pivots into something else, where I have so many people that I've talked to that are business owners that have employees, whether it's 1 or 30, that their priority is those employees, and not just saying it, but actually proving it, keeping them on the books, doing things that are outside the norm, maybe outside of their general course of day-to-day business, and pivoting that business to do something to keep those people going. A lot of places that I know, I'm sure you guys have run into the same thing. There are businesses that I know right now that are just breaking even. They're not making any money by any means, but they're just doing what it takes to keep cash flow neutral, so that money comes in and then pays out to those employees, so you don't have to lose them. I mean, you look at the cost of retraining an employee. If someone has to leave, they have to go off the books now, and maybe you're paying them $1,000 a week, whatever that is. They have to go because you can't afford to pay them, so they have to leave. They go on unemployment. They do all that stuff. We don't know how long this is going to last. We're talking April 30th now is the stay in place order at the least. So if we're that far out, the average person, I mean, I think I think the stat is something like 68% of the American employees or American workers live paycheck to paycheck. They can't go until April 30th. They don't have the means to do that. So they have to do something else. But by then, your business has been dramatically impacted as a business owner, and then you have to hire them back, assuming you have a business to hire them back to. So a lot of these moves and these pivots and the amount of my clients that are business owners and people in the community that we talk to, just like you guys talk to, that have moved into this completely different business model just to keep the doors open. Well, the drive-thru is open because they're not really doing doors open. But it's been really, really actually positive. It's been pretty impressive to see that. And I think stuff like being able to write off payroll and grants, kind of things, I think kind of shows the strength of who we are as a community and as a country.
It's been extremely refreshing to see small business owners just completely pivot overnight and make more with less, right? Make do with what they got.
That can pivot, though. I think we need to keep that in mind, because there are
and there's some that haven't been able to pivot at all because of the situation that that they're in. So everybody's going through it for sure. If you're just tuning in to the stream, here's what we're going to do. We did have a question, but it was Amy, our friend Amy Stefanowski. She asked me, was that rhetorical? I can only imagine what I said. That was. Oh,
you were talking about who's going to pay this back.
Yeah. Was that rhetorical? All right. But if you got a question about the stimulus package or any of the markets, whether it's the financial market or the real estate market, Greg obviously is a CPA, Pat's a financial planner, myself and Nicole are real estate salespeople. If you got any question, the next 3 questions that get asked, we're going to donate 3 gift cards to the giftcardproject.com. Those gift cards are coming from Service Station Equipment, from Martin McKinney, who sponsors Real Estate Radio. He bought a bunch of gift cards this week. We didn't get to give them all away on the radio show when we started this conversation. We still have a bunch. So we'll donate 3 to the Gift Card Project for the next 3 questions that come in that are based around any of the markets or the stimulus package. So next 3 questions, gift cards from Service Station Equipment that were all bought on local restaurants up and down the shoreline. He's got sneakers gift cards, Brewitt City. You guys never been to Brewitt City. Fabulous little pub up in JC. We've got gift cards, Grass and Bone, Amaroni's. We got gift cards everywhere. So we can donate 3 of those to the Gift Card Project for the next 3 questions, whether it's for, again, real estate or finance or having to do with this stimulus package. Is there anything, Greg, that we've missed in the stimulus package in terms of, we talked about SBA, we've talked about the family and the single recipient. What else is wrapped into this stimulus package outside of individuals and small businesses getting checks?
Yeah, so a couple things I'll touch on. In terms of housing, so this is advice I'm giving to my clients right now who can't pivot, to Nicole's point. My barber, my wife's hairdresser, they were forced to shut down, and there's very little they can do to pivot besides starting some sort of online business teaching people how to cut their own hair or touch up their roots or something like that, which folks are doing.
May be coming very.
Yeah, I mean, folks are pivoting like that. But to my point is, what I'm telling them is for the folks who can't pivot, your number 1 job right now is to get on the phone with your creditors when you're sitting home and say, hey, I can't make my mortgage payment. I can't make my car payment. Look at all that unnecessary spending, all those recurring charges you have going on. You're probably not going to want to get rid of the Netflix right now, but everything else can probably go. But with that, any of the federally backed mortgages, you can request up to 360-day for forbearance on that, or forbearance, I should say. So that's something you should be doing. If you are truly unemployed right now, get on the phone if you have one of those federally backed. The other is student loans. Student loan payments have been suspended for 6 months. So 2 things here. For a lot of people, that's a huge chunk of money that if you're unemployed that you don't have to pay. At the same time, it's not earning interest right now. So if you are able to pay it, it's a great way to accelerate that debt reduction process right now, because if you're making that normal $500 payment on that student loan, it's going to go a lot farther right now than it typically would. So that's something to keep in mind.
So if you're still paying normal amount, no interest is being calculated during these 6 months.
Correct.
Yeah. So if you got the money you want to pay.
Yeah. If you have the money, I mean, keep paying it. Or, if you don't know, stop paying it for a little bit and put that money aside. And, before, I think September 30th is the date they're using. If we're in the clear and you're, happy and healthy, take some of that money and sock it away while you can take a good amount at a principal. So that's one of the things that'll help a lot of people.
Can I just ask a quick question there? Because obviously, especially like on the mortgage side, there's so many questions about, sort of like deferring the payments or doing that. In that situation, is there going to be a lump sum that's going to be required at the end then? Or because that seems to be sort of, everyone thinks like, hey, I don't have to pay this, or I get to pay a smaller portion, but is there a potential for there to be, then you owe the 6 months at the end?
Yeah, so that's a really great question. What I'm reading on the federally backed, so we're talking about Fannie Mae, Freddie Mac, HUD, the VA loans. So on that sort of stuff, it's saying that no additional fees, interest, or penalties can be assessed for the forbearance. So during that time, there shouldn't be an assessment. Now, what I've heard is for people who don't have a federally backed. The advice I've been giving was what I said before: get on the phone with them. Some of them are playing ball, and some of them aren't. Some are saying, yes, we'll give you 3 months, but come July, you're going to have 3 months worth of payments to pay, or we'll allow you not to pay right now, but the interest is still accruing. Which, if you don't have the money to pay, you don't have the money. But yes, some are being a little bit more lenient right now. And again, to Byron's point earlier, we don't know where we are in this cycle. It's not like we can say, hey, we're halfway there right now, right? We just have to stick it out for another 30 days. So, is this the last stimulus package? If we do 30 days and everybody stays at home and we get through this, maybe. But if not, there's probably going to have to be other stimulus to keep people, encourage them to stay home, but be compensated for doing so.
Right.
All right, we got a question for Pat, my boy Raja. What's up, brother? For a 401k, what are your suggestions for diversification?
Oof. I love when Raja throws the questions at me that literally have no universal answer. So lots and lots.
Buy real estate.
Lots of in your 401k.
To a self-directed 401k, right, Greg?
What's that?
You can buy real estate in a self-directed 401k, correct?
Well, actually, I don't like real estate in a. That's a whole nother hour.
All right, one other thing. Go ahead, Pat. Answer the question.
Yeah, go ahead.
That's a whole different fight that Greg and I can have. No. So listen, I mean, there's right. So there's lots of different rules. Right. Number one, it depends on what you make, how much you're able to save, how old you are, what your goals are. So there's not really a generic answer to that. It also is going to matter on who your provider is, right? Because you only have what most 401k type plans are only give you a menu of options to pick from. You can't go buy Apple directly inside of a 401k, generally speaking. You usually have to pick from the funds that are available inside the menu. The funds are available. They're picked by whoever is administering the plan. So back to the previous point, if you are doing self-directed, then there's lots of different things you can do. But from an overall kind of, sadly, there's no generic answer. It's definitely something you want to work with somebody on. If your 401k provider does have a planner available or planners available as a service, definitely recommend you call them, give them kind of a snapshot of who you are and what you're doing. They should be asking you lots of questions before they make a suggestion. It's kind of like saying, what's the perfect house for me? Or, hey, Greg, how much do I need to save in taxes? There's so many other pieces that you have to have first before you can really answer that. Unfortunately, it's very difficult to just kind of go, you should have X. But definitely make sure you're working with someone, especially now, right? Right now, again, back to the 60-40 mix we were talking about before, we've actually in the last 30 days, the generic 60-40 split, if you had 60% in equities and 40% in more bonds or fixed income, if you just left that alone, your allocation has changed dramatically in the last 30 days anyway, because of the way that the markets have really beaten up equities. So we're going to see today and tomorrow are going to be very interesting, because at the end of the quarter is usually when the big institutional institutional owners start to rebalance their portfolio. So like the Harvard $55 billion endowment, those kind of things, you start to see reallocate back to what they were supposed to be in, because throughout the course of the quarter, the market will fluctuate and change. So it's going to be very interesting to see today and tomorrow. I'm just looking now.
If it is a self-directed, oh, go ahead.
Yeah, no, sorry. Yeah, so he said it's self-directed. I mean, again, it's going to matter, Raj, on how old you are, what you're making, what your goals are, how much you need to spend in retirement. Much more of a one-on-one question, which I'm happy to answer one-on-one for anybody. But.
Yeah, and if we were going to be super generic, would getting some type of index fund, I know there's a ton of index funds out there, but would having a portion of your 401k wrapped up in an index fund make some sense? Or Pat, I know you can't answer a lot of questions because of the guidelines in your industry.
I mean, it could.
And I might be pushing you a little too far there, but
Byron, are 3 bathrooms better than 2? Who knows?
Yes.
I don't know.
Yes, they are.
Not when there's no toilet paper.
Good point.
Maybe not now. You're right. You got to fill out with toilet paper.
And I don't know if Pat has been able to dive this far deep into the new tax law, though. There are things that provisions that have some effects on retirement accounts. One of them is that you can take up to $100,000 distribution from your retirement account and not pay the 10% penalty, which you normally pay if you're under the age of 59 and a half. And one really cool thing about it is you actually have the ability to pay it back over 3 years. Most of the time when you take advantage of those programs, or unfortunately, if you have to take money out, I discourage it generally, and Pat necessarily can't give his opinion because of his disclaimers. But my point is, the more we allow people to touch their retirement accounts and take money of that, you're starving your future self. So I generally don't like to encourage that. But the reason I like this program is that you have 3 years to actually be able to put that money back in, which is really nice. Now, granted, if you take it out now, you might miss the upside of the potential market if that's where it's heading. But also, you do have that availability. So that it's really nice if you, for whatever reason, have to take advantage of that. The other provision is if you borrow against your 401k, I believe, Pat, and you may be able to confirm this, I think normally you can borrow up to $50,000 as a 401k loan. They've increased that up to $100,000, a couple other technical things there. And also, if you are somebody who is older and you have required minimum distributions, those are being suspended for the 2020 year, which could actually be a good thing for somebody who has required minimum distributions but doesn't really need to take them, because if you're taking those distributions now, it's going to take a larger hit on your portfolio to distribute that, and you're going to lose out on that power once the market starts to go back up. So not having to take that money out is really beneficial this year, in my opinion.
I'm not a financial planner, but I always thought taking a loan against your own 401k is better than taking a loan somewhere else, because you're paying yourself your own interest. But again, I'm not a financial planner, so that could be the worst advice I just gave of all time. You'd want to talk to somebody like Pat or
financially, I think financially, I think it makes sense. However, it doesn't take into account the factor of risk, which is if you happen to lose your employer during that time period, you have a period of time you have to pay that back. Otherwise, that entire amount is considered a distribution, and you don't have the ability to put it back in. You then have to realize it as that income on your taxes and a number of other things. So there is a risk factor there, even though financially it might be better than borrowing from the bank or something.
Well, yeah, and then you go back to the cost of money, right? Where what does it cost to borrow money? What are you missing by taking the money out of your 401k in terms of of a market? There's a lot of moving parts to that. But generally speaking, yeah, I mean, I think. Yeah, we usually, as planners, very much, financial side versus Greg and tax side, generally speaking, the last place we would recommend anything that you try to rip money out of is usually some sort of a retirement account, especially an employer 401k plan. I mean, again, very generic, lots of different situations, but generally speaking, yeah.
Raja, great question. So that's one gift card over to the giftcardproject.com. Next two questions, we're going to donate gift cards. We've got a whole bunch of gift cards that Martin McKinney and everybody over at Service Station Equipment bought for us. We started giving some away on the radio show on Saturday. We've got some left over, so we want to donate those gift cards that we have to from local restaurants. We've got Brewitt City Pub. We've got Sneakers, Amaroni's, Grass and Bone. We've got a whole bunch of different gift cards. We're going to donate 3 of those to the giftcardproject.com. So the next 2 questions, we'll donate 2 more gift cards over to the Gift Card Project. And if you've got a question, put it in the comments below. It could be anything about any of the markets or the stimulus package that was just released last week. Greg, last week, 3.3 million people filed for unemployment. They expect that number to continue to rise. That was a record last week, by the way, an all-time record in 1 week. And that number should keep going up, or that's the projections right now. I already saw today that there was talks. Nobody's even gotten a check yet from the $2.3 trillion stimulus package. And I'm already seeing today that there's talks of another stimulus package. Do you think there's another package on the horizon?
I think I think there is, because I think we're going to know more tomorrow. The president last night teased out this keeping everybody sort of in place, quarantined. I don't want to use the wrong word, but until the end of April. And I think they made that decision based on some statistics. They're really looking at the data now. They're supposed to formally announce that tomorrow, Tuesday. So I think when we have some of that information, it may give us an idea of where we are on this progression. That's really going to, we don't know how far into this we are and how much longer there is. Some of these laws, and Byron and you and I talked about this off air, is that a lot of the laws that are being passed, this is now the third package since we've been in COVID. They're trying to get them passed as fast as they can, but once it actually becomes law, it's almost too late at that point, because what we're doing has progressed too far. So people are going to be out of work for a while now, and this one-time stimulus payment may not be enough. The X number of months for unemployment. Getting a lot of background noise from somebody.
Yeah, that was me. I don't know if you guys could hear that noise before that. That was
is that the Keurig? You guys need a new one over there or something?
I don't know what it is, but I think it's the fridge.
Unfortunately, so I think the focus, I think there might be another package, but I think the focus is, if you're somebody who does qualify for unemployment, thinks you're going to qualify, thinks you're going to need it, apply now. Especially in the state of Connecticut, the software system they're using is something like 25 or 35 years old. It was not designed to handle this volume. They were actually in the process of replacing it. Won't be done till next year. But my point is, they were going from a couple-day turnaround to, I was on a call with the Department of Labor last week, and based on last week's numbers, it was going to be 3 weeks to process claims. I'm sure this week has at least doubled, if not, some other exponential factor in terms of people that are now filing for unemployment. So if you are somebody who meets the criteria, which essentially is anybody who's not working right now, I would encourage you to apply sooner than later.
I've got some friends. I have a friend I'm thinking of right now, a Mohegan Sun employee that maybe 3 weeks ago filed because they were out pretty early on there. Still no doubt, Greg.
Right.
$0. Yeah.
It's like I said, it's all of this is, to use the word that's being thrown out all over the place, but all of this is unprecedented. So we're dealing with things that we've never had to deal with before, and things on a scale that we've never had to deal with before. So a lot of the infrastructure just isn't built for the the situation.
But the money is coming. It just might be delayed.
Yeah, the money is there. And in fact, so part of the unemployment provision, one is that basically everybody qualifies for it, meaning there's not a limited pool. Basically, if you're out of work and you're a gig worker, you were employed through W-2 or other means, you qualify. And what the federal government has come in and said is, in addition to whatever you'd normally qualify, and it's different for every state, and they have a whole bunch of equations they use. In addition to that, the Fed is saying, we're going to pay you an additional $600 per week on top of whatever the state calculates. And that's going to be for 4 months. So essentially, people should be made whole, for lack of a better term, for at least a 4-month period if they're out of work for that long.
Greg, this question is also for you. What will the tax implications be for people who would be getting this stimulus bump, those paychecks, those $1,200 checks, or even the SBAs, that are getting this loan that is going to be forgiven? What are the tax implications on both, and will that be due in 2021?
Yeah, so we'll look at this for actually 3 different categories. So if you get the SBA loan and it's forgiven, that will not be included as taxable income to the business. It will be forgiven. The portion that is forgiven will not be considered income to you. So that's for the businesses. For the individuals receiving the stimulus checks, those will also not be included in your income for income tax purposes. So you will not pay income tax on that. Now, in the third category, the unemployed who are collecting unemployment, those unemployment payments are subject to income tax, just as if you would be getting a paycheck. So my tip there is, there's a box you check when you're filling it out, asking if you'd like them to withhold taxes from your unemployment payment. I would highly encourage you to do that, or at least know that that money is going to be taxable. If you need every dollar you can get right now and you choose, just know down the road there is going to be a tax liability there.
All right, great question. So that's 2. Is that 2? Can I count?
One more just popped in.
2 gift cards going over to the giftcardproject.com. Again, Service Station Equipment, who sponsors Real Estate Radio, bought a bunch of local gift cards to the restaurant. We're pulling from that pool. We're taking 3 gift cards from local restaurants. We got Sneakers, Brewitt City Pub, Amaroni's in Guilford, a whole bunch of gift cards. I think those are going to be the 3. We're going to take one of those 3 each, dump it into the pool over at the giftcardproject.com. And we've got our third question. So boom, we've hit it. 3 gift cards are heading over to the giftcardproject.com. Encourage you guys, obviously, to go check that out and check out the causes that these gift cards are going to. It's a 2-for-1, as I like to say. All right, next question. When do you start getting paid for this unemployment? I had just mentioned to you, Greg, I got some friends that haven't received their dough yet. So do you start getting paid the day you file, or does it go back to the day that you stop working? Where does that date start of the money?
So my understanding is historically you would file when you stop working, and there was a 1-week grace period where I think essentially for a week you would be unpaid. They've waived that 1 week. So that's the law or the rule. Essentially, you should start getting paid. My understanding is from when you file. The practical side of this is that's when you qualify. The actual logistics of them distributing the payments, to your point, Byron, we don't know. There's just a backlog of processing these, and for a whole number of reasons, based on the technology. A lot of these state offices, they only had a certain amount of staff that was working on this. Some of them are now working from home, and they actually need a lot more people than even what they started with. So they're taking people from other departments and trying to get them trained up on how to process these applications. So unfortunately, you qualify for essentially, my understanding is from the day you file. When you will actually start seeing the money, that's unknown right now.
Yeah, I mean, we're asking for, we have an infrastructure system that the all-time historical record for unemployment claims in a week was 650,000 prior to last week. That's the highest.
That was in the 80s, right? If I'm correct, was that in the 80s, Pat?
I think it was actually even prior to that, but it's, I'm sorry, I think you were in 86, 87, but
yeah,
650,000, and you multiply that 5-fold on an infrastructure system that, to be honest with you, is probably still from the 80s, at least in Connecticut. You're not it's not that you won't be eligible or there's any kind of, it's just literally there, if it's a fire hose problem, we have all the water pressure in the world and we have a regular home faucet trying to get it out the other side. It can only go so fast.
Yeah. And certainly recently we haven't had a strain on unemployment. So you can imagine there's probably less people assigned to that role on all these state levels, right? Because across the board, we've had a lot of jobs, and we've a lot of people are hiring as of 3 weeks ago. Last week, 3.3 million people. Are there any early projections, Pat, that you've seen for numbers for this week? Has anybody put a projection out there?
I haven't seen anything in terms of anyone who's willing to stand behind, a particular number. There are